All right, we're just getting started. Welcome to Be the Boss of Your Money. I'm Mitch Goldberg. Thank you so much for taking the time to watch this live stream. I want it to be your post-market live stream about personal finance, investing, so that you know what's going on in the world of finance, the market, the economy. Okay. If you know these things, if you are educated about this stuff, I'm not saying you aren't educated, I'm just saying in general, you'll have a tendency to make better financial decisions. And with talk about Social Security having to take a 20% cut to its payout over the next year or two, maybe, with inflation running rampant, and I mean running rampant, you know, your financial decisions are more important than ever. You know, there's no more bailouts. I don't think the government can bail us out again if we do get into a serious recession, like in 2008 to 2010, or the one from the pandemic. There's just no more appetite. And if you feel like all of a sudden you don't have a safety net, like the Federal Reserve just backed away and we're on our own as investors, you're right to feel that way. So I really want your decisions to be taken with more thought, more creativity. So the topic of today's show is how to invest when you don't have confidence in the economy. I've talked about this the last couple of months, where I've been saying this is the time when you're going to be investing money knowing that your money is going to shrink, that your stocks are going to go down, that the market's going to go down. And that's exactly what's been happening. So how do you stay invested? Like, people right now are asking me all the time. By the way, the topics I come up with for this live stream are these are the topics that I'm all over the place. I come up with these topics because they're based on questions that you ask me, that I see you out when I'm at the supermarket or I'm at a networking event. We're emailing with you. These are the questions people ask me all the time. A weekend doesn't go by where a few people will ask me, what do you think of the market? Do you think it goes higher? Do you think it goes lower? Do you think it gets worse? Do you think we go into a recession? What's going to happen with interest rates? What's going to happen with the price of my house? There's, and these are good questions. They're very, very broad questions. And I don't like very broad answers because they might sound good, but I think the broad answers are the kind of answers that could sound good, but can be wrong just enough to throw you off. I think you're asking because you want to feel like you're having a sense of control over what's happening in the financial world, in your financial world. That's the important world, right? Your financial world. So I want to clear some things up, and I want to talk to you about Apple and what Apple is doing to the fintech space. If you recall, 2 or 3 years ago, fintech was all the rage, and now fintech is just getting obliterated. And the entrance of companies like Apple and Amazon into fintech, I think just further puts the kibosh on fintech stocks. We'll talk about that. While you're watching, I see Sharon is out there. Mom, hi, Mom. Love you always. That's sweet. And who else is out there? Okay. So, by the way, while you're watching this, if you have any questions or if you're watching the replay, hit me up with any questions that you may have. Words of wisdom, words of encouragement are always appreciated. So anyway, let's roll the intro. We've got a bunch of things to talk about. The show is going to go quick today. All right, here we go. All right. Thank you so much for joining me. I'm Mitch Goldberg. We're just getting started with this live stream called Be the Boss of Your Money, Monday through Thursdays at 4:30. We talk about personal finance, investing. We even talk about politics. We talk about values. We talk about a lot of things, but it's all about you making financial decisions that are right for you. And believe it or not, sometimes financial decisions are based on other things besides maximizing gain. Sometimes they're about minimizing or potentially minimizing loss or risk, potentially maximizing gain. And sometimes they're just about investing in a way that you're comfortable with that conforms to your personal values. And we need to talk about these things because you have decisions to make, and I want to help you make those decisions. Market was up today. It was a down week last week. After the week before was an up week. The week before last week broke an 8-week losing streak for the Dow and a 7-week losing streak for the S&P and the Nasdaq. So last week was up. This week we were looking a little down, obviously, because last week was down. The week before was up. But this week, we're kind of flattish up a little bit. And it looks like the stock market is trying to find a solid footing. Now, when did all this stuff start, this crazy market? It really started with the Friday after Thanksgiving. And the Dow is off about 1,000 points that day. And, that was a pretty rough day, but the market closes early on the Friday after Thanksgiving. The stock market closes at 2:00. Is it 2:00 or 1:00? It closes early. Okay, I think it's 1:00. So the market closes early, low volume, and people just say, "Well, the market's up a lot. The Dow's off 1,000 points, but no big deal." But ever since then, and we've been going on now for 7 months of volatility. This isn't like a new thing, the volatility we're having. This has been an extraordinarily volatile year so far in 2022. Yeah, markets are down a bit, nothing crazy. When you look at the major averages, underneath the major averages are stocks that are down from their former peaks 50, 60, 70, 80% plus. So a lot of you are watching this wondering, Mitch is going to talk about the S&P 500 or the Dow or the NASDAQ composite. These are all indexes, by the way. You cannot invest directly into an index, but you could invest into a security that tracks or mimics an index. You just have to get that in there. But no, I don't want to just talk about the indexes. Some of you legit bought Square and other fintech stocks like Affirm. And there's tech stocks like Roku, and you are probably losing so much money on these stocks. So you're like, I don't want to hear about the S&P 500 or the Dow Jones. I'm worried about my stocks. What do I do with them? That's part of what we talk about here. We actually talk about a lot of the stuff, and I want to talk to you about confidence because it takes a lot of confidence to invest. Think about that. It's one thing to have spare cash and then to have spare cash to invest. Now, I'm not just talking about spare cash. Obviously, I want to bring up into this. You have maybe a retirement plan you contribute to, a 401k, an IRA. So a few things that we should all look to do. When you invest, look, you get your paycheck, and then you pay your taxes, you pay your health insurance, and then what do you have left? You have your paycheck, and you take your paycheck and you spend it and you save some. Hopefully you save some, but it's not possible for everybody. If you, if and then you out of that money, you could also invest in a 401k, for example. One of the reasons why a 401k works is because the money is taken out of the 401k before you get your paycheck. So no matter what, at least you've put something away. And maybe you could also have some money automatically sent to a savings account or another checking account or a brokerage account. And the idea is you're paying yourself first. You put your money away first and then spend the rest. Because if you get all of your money from your paycheck up front and then you spend it with the intention that, well, I'll be careful with my spending and I'll save what's left. What happens is many people don't save what's left because there is nothing left. If the money comes out first, you've already done the savings and investing part. That's really critical. And that is the first piece of advice. The first thing for new investors. I'm going to be talking tomorrow with Michelle Fox over at CNBC exactly about this topic. So when the article comes out, I'll share it all over social. So if we're not connected on LinkedIn, on Facebook, wherever, Instagram, wherever it is. Connect with me there, Twitter. I'll share it. You take a look at it. Hopefully, some of the tips I offer you will be helpful to you. And if you have any questions about that, you're always welcome to reach out to me. If enough of you reach out to me about a particular subject, I'm definitely going to talk about it here on the live stream, because that means enough of you think it's important to get into. So it's been a rocky year. It's tough to be confident in the year when all you hear about is recession. We're going into a recession. We're going into a recession, which, by the way, I've said here in the last few weeks, I believe we are in a recession already. Now, I don't think the tried and true cut and dry definition, 2 down quarters in a row, works perfectly for the definition of a recession. And, the things that go against the thought process that we're in a recession are the consumer is flush with cash in very good shape heading into this. There's a big wealth effect in real estate, in residential real estate, meaning there's just a massive amount of people who have well over 20% equity in their homes, which is equity that people could tap and take out and use it to either sustain themselves or make new investments, or just spend it on crap. And the other thing is the unemployment rate is pretty low. It's in the 3.8, 3.6, 3.6% unemployment. I hear you, but these are lagging indicators. So let's tackle employment. Already, job openings have come down quite a bit, and you'll see those come down first until you get to a more even amount of job openings to amount of people looking for a job. Right now, there's a lot more job openings, but when companies are flush with cash and doing well, and the economy is in decent shape, there's going to be more job openings. But that number, I think, will continue to decrease because it's decreasing now. So I'm just going to extrapolate that trend for the short term. By the time business slows, that's when the jobless will go up. That's when unemployment will go up. And you're already seeing companies putting in hiring freezes and laying people off. It's happening already. And there's been a number of publicly traded companies that have announced that. And then let's take a look at the consumer. The consumer is strong. Yeah, they're flush with cash. They got stimmy money during the pandemic. Jobs are plentiful. People have gotten raises. I don't think the consumer is as strong as the many of my fellow pundits make it out to be. I think inflation has really sapped extra money from people who had extra money. And I hear, yeah, inflation's only up it's a lot. It's up over 8%. I realize that I follow statistics for a living. This is what I do. But I don't think the official statistics tell you the full story. I think in most places, for most things, prices are up way, way more than what the official statistics are telling you. And you know that. When you have to spend $5 or $6 for a roll of paper towels in some areas, you get that. Gasoline, food, and things we want, not just things we need. So I don't think the consumer has a lot of dry powder. I think the consumer has been blown out of their excess cash position. And even if they haven't, they see the rising price of goods. They're more apt to now maybe save more and cut back on spending because they're worried, and buy fewer things. People who go shopping and the things that you ordinarily would buy that you put in your shopping cart, you go, you know what? I don't really need that. I'm going to skip this purchase. Whereas maybe 6 months ago, you wouldn't have thought twice about a particular purchase. So that is happening all over the place. And I don't think the consumer is as strong as he or she's made out to be. And I don't think companies are as strong as they may think. Now, the first quarter of this year, profit margins were better than expected. Companies have had no problem asking for more money, maintaining their profit margins. I mean, corporate revenues, by the very nature of inflation, should go up. Because if everything you sell is $1 and everything you sell is $1.08, well, obviously you're going to see more revenue. Uh, but if your costs go from 90 cents to $1.07 to sell that product at $1.08, your profit margin's a penny. Whereas before, maybe it cost you 80 cents to make something you're selling for $1. You had a 20-cent profit margin or 25% profit margin in these percentages. So we have to see if corporations could hold on to their profit margins. This is a kick against confidence because people are worried about that. And you're already seeing it happen with companies like Walmart and Target. And the other thing is, consumers start to cut back on the number of items that they buy. So a consumer might spend $300 at Costco and get, let's say, 25 items. Maybe now they're only going to get 19 items for the same $300. It's called demand destruction. And it doesn't show up in the statistics early because Costco is still going to say, well, they're still spending $300 every time they make a trip into the store. So nothing's wrong. Everything's fine. It takes a little bit of time to see the demand destruction and fewer items that are being sold. These things take time. And I just don't know why people are running out and saying, oh, we're going to avoid a recession. They could say, well, Mitch, why are you saying we are in a recession? I think these are recessionary. I think it also depends on the speed at which things slow down. And I think we have to take the definition of recession and change it around, maybe, manipulate it a little bit. People are feeling a pinch. People are feeling pessimistic about the economy. People are worried about things. I mean, you see it in the political polling. This is why Democrats are expected to get totally shellacked in the midterms coming up in November. I'm not trying to make a political statement. I'm just saying that when people are upset, they vote out incumbents. Incumbents have the most to lose in bad times and the best opportunity to stay in power in good times. This is the way it works. It's always been like that. I'm giving you the observation that you probably know already. So people are worried. And yet you're still expected to maintain your investing. You're still expected to keep going with your investments. Okay. So how do you stay positive in a market like that? And it's not easy because you start to wonder what should you do. So that's what you should do. From my point of view, is you should keep investing. You need to come up with a personal finance playbook right now that is not only about retirement in the long term, sending kids to school in the long term, paying for things. I think what you should do is make a plan now and like literally reassess what you have, where you stand. And if you want to know what your cash flow is, just look at the last 3 months of bank statements, money in, and what you have left at the end of each month in your bank statement. Okay. You don't have to go through every single bill and every single line item on your credit card. On your credit cards. You do that when you decide you want to look for things to cut. Like I'm going to examine every line on my credit card, see what I need to cut. I don't need Disney Channel and HBO and Paramount and Disney Plus. What are you going to cut? Quit the gym? What you go line by line to see what you're going to cut. But if you just want to get a bottom line sense of money in, money out, also known as cash flow, you have to look at what your statements look like. Is there anything left? You want to make sure that you've got something left if we do go into a financial shitstorm called a recession, because you're going to see a big change in employment. And the government is not going to, in my opinion, be able to hand out stimulus money and extended long-term unemployment insurance for workers. The states aren't going to do it. The government's not going to. The central government's not going to provide the funding for that. This is my opinion, but I want you to be ready. And then you have to decide: can I hold on to my investments? I've seen recessions before. I've been doing this for 32 years. I was talking to a friend of mine today. I said one of the tough things about the 08, 09 recession and bear market, from my in my eyes, was I have a lot of clients who are commercial real estate brokers, and a lot of them were doing well into leading into 06, 07. And when the stuff hit the fan and real estate, including commercial, went down and transactions stopped, I had quite a few clients literally dipping into their savings to pay bills, and then dipping into their taxable investment accounts, and then dipping into the retirement accounts, paying penalties. Doesn't matter. They needed the money, and they were not ready for it. And what I'm saying is, how ready? What is your financial preparedness, your readiness, your level of preparedness for a recession? We talk about this all the time. Do you have an emergency fund? And something like half of Americans or more can't even come up with $1,000 cash to pay an emergency bill. More than half, I think, is the stat. It's a scary statistic. You really need to change a couple of things on that, okay? And if you feel like you're stuck, then seek professional help, financial advice, and see what you could do to get unstuck. Now, as far as staying invested in a crummy market like we have now, what keeps you in the market, what keeps you in the game, is occasionally we have these random up days or a random up week, even a random up month while we're in a downtrend. Kind of like we had 2 weeks ago, kind of like what maybe we'll have this week. We'll see. It's only Tuesday. It's the randomness of the potential up markets that keep you holding on. The thought that this could be it. We're going to go right back up to where we were. We're going to go back to the good old times. I firmly believe that the averages, the S&P, NASDAQ, Dow, will recover and not only reach their former highs, but make new highs. I believe that because it's always happened. Indexes recover. Individual stocks, though, don't always recover. Did you buy Roku at like 600 or 700? Maybe you have to ask yourself, will that ever recover? Okay. These are the kinds of questions that I ask myself. I actually ask myself more questions than I'm able to give myself answers, because I want to always battle test everything. I always want to be inquisitive and come up with strategies and ways to aid somebody in their financial journey. That's what I do as a financial advisor, right? So you don't have to be anything, but to be confident, knowing that you have the ability to not dip into your investment accounts when we go into a recession, will make you much more confident about holding on to your investments, even in a down market. Even in a down market. The other thing that'll make you confident is having up to date job skills. If you're in a job that doesn't require a very high level of skill sets, it means you could be replaced by a lower cost laborer, aka a younger person who's willing to work for less, who doesn't have the same financial obligation burdens that you may have. You have to make sure to job proof yourself by earning an advanced certification, getting a new skill, showing an employer that you are still learning. I mean, I see on LinkedIn there's all these LinkedIn learning courses. There are so many courses and things you could do to improve your job skills. You take these job skills, these new skills, these educational things, certifications, and you put them onto your LinkedIn profile and a resume, so that when you are out there, people will look at you less like a over the hill individual and more like an active learner who also has experience. And if you're younger than me, an active learner who's gaining experience. I'm not saying if you're 40 you don't have experience. I'm just saying that as time goes on, these are the things that you need to do to job proof yourself. Okay, recession proof yourself. And that is another way you'll have more confidence to stay invested in the market. All right. If you feel that recessions come and go, market cycles come and go, and it's all part of the business of investing, you'll also be more confident to stay invested. We've seen cycles, and every time a cycle ends, it always is at the moment the worst thing that's ever happened, the worst cycle to ever have an ending. It's just the worst thing. But we do get past them. And if you need to become more tax efficient or tax aware of your investing, if you need to upscale and get out of lower quality investments and into higher quality investments, I'll give you an example, like getting out of some tech stock or consumer tech stock that's earning no money, has no shot to earn any money. You could sell that, take the cash and put it into a better into a security that's showing earnings and revenue and growth. You could do that. No one says that the money you lose on a stock can only be regained in the same exact stock. And since all stocks are pretty much down a lot, including a lot of what I see are the good ones, that's another thing that you could do to stay confident. All right. So let's take a look at something I want to talk to you about, Apple and what's happening. I'm going to share my screen real quick. Okay. You see over here, this line on the right. This is the year high. This is the year low. So Square has gone from 289 to where it closed to the 84. Big drop. PayPal from 310 to 88. When PayPal was at like 140, 150, I was like, wow, that is looking like a bargain. I didn't touch it. I didn't get into it. I'm glad I didn't, just because the trend lower was so strong. I don't know if the trend down is over or not, but Affirm. Do you know what Affirm is? 176 to where it closed to 24. Affirm is uh, an installment company. You see it on all kinds of websites. You buy this product for $200. You could pay it off over 6 months in 6 equal installments, usually for no interest. So it just makes shopping easier, and you could buy so many things and pay it off like 4 to 6 months. But now Apple is getting into this business where you could go from iPhone to iPhone with Apple Wallet. So if you buy something from me, or if I buy something from you, we could just put our phones near each other and send money to each other through Apple Wallet. We don't even need I don't need PayPal. I don't need to send you money through Zelle or Venmo. We just put our phones, like tap the phones, and I just gave you the $100, or you gave me the $100, whatever the amount of money is. Okay. Apple now, if you use things to use Apple Pay, Apple now has a pay over time feature. That's what Affirm is, pay over time. Apple is going to give you that too. And the thing is, Apple is not even going to make money from this, but they're so profitable in so many places. And this is like Amazon's strategy also, that they could get into a fintech business. Apple can, so can Amazon, and not have to worry about a profit for a very long time while they develop the product and get more and more people into it. Like Apple wants to bring more people into their iOS sphere. Okay. What does that mean for Square, PayPal, and Affirm? I'm not saying that Square, PayPal, and Affirm are going to lose every stitch of business that they have. But if Apple can take a lot of their future growth away and some of their current users away, then what do these companies do for growth? And when you get a behemoth like Apple getting into these businesses, it's a scary thought for investors in those old businesses. That's because you've got such a big player in it that can figure out how to manage the business, maybe even make it bigger. And if Apple's going to do it with iOS, Google's going to do it with Droid. Or you'd expect that, right? So just keep in mind that when you invest in innovation, the flip side of the coin is obsolescence. And there's always somebody who can come out with something cheaper and better. Howie's out there. Buy now, pay later. Yes, thank you very much. Buy now, pay later. Thank you for the assist, Howie. Oh, man, I'm really glad you're out there. Hey, buddy, are you up for a visit next week or the week after? I want to come in and see you. Let's do it. Right. Um, Howie is an attorney in New York City, and if you have issues, corporate contracts, personal injury, that kind of thing, even real estate, he's your guy. Okay, he's a New York City attorney. And anyway, so these are the things I wanted to talk to you about. I think we're running out of time here, so let's do this again tomorrow. Actually, tomorrow I will probably be out at this time. So I'm like, it's weird. I had to skip the show yesterday. I had to be somewhere and have to be somewhere tomorrow. Unusual that I have to skip it twice in a week, but I don't like doing that. It's life. But if I'm not back tomorrow, I'll definitely be back Thursday. If something crazy in the market happens tomorrow, I'll do a live stream, but I'll do it a lot earlier in the day. All right. Have a great day, guys. And again, thank you so much for sticking with me. I can't tell you how much it means to me. It's just, it's a joy. Thank you. Here we go.